This is the briefing for Friday, February 21st. Well, we had a pretty good sell-off in today's trading, and it's been really coming. The market has been really signaling to us that as it's tried to push higher and break above the all-time highs and important resistance numbers, that the internals certainly were not strengthening, and the market was just weak from an internal perspective that suggested unless that changed, we were going to see some type of rotation back to the downside. Now, somebody asked me today if I was concerned about the sell-off, and I said, no, I'm not concerned about it. And the main reason is, at least at this point in time, is that we're in an area of rotation. And that rotation, unless we break through lower key reference areas, is typically, what we see in the market. We know the market runs and pauses in all degrees of time. This just happens to be a greater degree time and price pause. So looking at this from that perspective, we have short, intermediate, and longer term key reference areas of support areas. Now, what I would be concerned about is the fact that this low here comes in right about 598, and that's where we are pretty close to the low of today. It was at 598 to 599. Now, that being broken would not concern me. Hitting 590 would not concern me. 590 is really another rotation, and you can see this rotation. First of all, we can go back. This is one time frame of rotation. This is another time frame of rotation, and you can see that pretty clearly. Then we had 3 to 4 days of rotation at this upper extreme, where I think the spiders hit 513 for a high. And then we got this move or this rotation back down again. So what we're doing is we're in the process of completing this type of rotation. So it wouldn't surprise me to see 590 tested. Now, even if 590 is broken, I would not be too concerned unless or until we approach 580, because that would then complete this greater degree time frame rotational pattern. But if 580 is broken, that would then give me some concern. Now you can see on this day it was broken on that day, but that was a false breakout. Volume was extremely low. Breadth was not was basically muted. It wasn't negative to any degree. So it was pretty clear that was a false breakout. There was no follow through, and you can see the next day that we traded back above the high. It closed at the high of the day, as you can see as well. Volume is increasing on this move to the downside. That is strengthening the sell-off. Breadth in the indices is declining. That is strengthening the sell-off. And I want to point out the divergence as we went into, this was Wednesday's high. As we went into Wednesday's high, look down at market breadth, and you can see the divergence that occurred going into that high. And you can see the 3 days prior to that, as we probed 610 and then traded through 610, what was happening with market breadth and with volume. And in the weekday briefings, I pointed this out, and to be very cautious of long positions as a result of that. Now, I want to couch this with the fact that it would not surprise me to see 580 tested, because that would complete this longer term rotational pattern. I would be a little surprised, or I'm going to be a little cautious on short positions as we approach 590, mainly because that would complete an intermediate term time frame counter trend rotation right through there. So basically, we have really important key reference areas: 610 up to 613 in the spiders, 590 down to 580, and 580 is broken. Then all bets are off, and we've got other key reference areas, support areas we can talk about, and then analyze the market internals if and when that were to happen. But unless or until that happens, I'm not going to have any heartache over this market right now. I'm going to try and make a little bit of money on the short side of the market. Looking at the Qs, you can see the Qs are in the same position as the spiders in this rotational pattern, with an upper extreme at 540 and a lower extreme in the 500 area. Now you can see this 620 area is the similar area to the spiders I pointed out. And you can see the Qs really haven't reached that point yet, as the spiders have reached that same point. So I'm just going to kind of sit back and see what happens here. You can see the volume is increasing, breadth is declining. So the market internals are supporting the move that we saw that started on yesterday and then followed through in today's trading. And then, of course, you can see the Russell. The Russell signaled this whole move. You can see the Russell never made a new high or tested this high as the other two indices did. It really lingered. And then, of course, in yesterday's trading, and I explained it in yesterday's briefing, that I saw the Russell begin to sell off pretty early in the morning when the others were trying not to sell off, and that led to a short position that I put on. And then, of course, you can see we traded right through 220, and this is that same area from a chart pattern perspective in the spiders and the Qs that I pointed out a minute ago. So and we've traded and closed below that level in the Russell. So if the Russell is giving us predictive information, it would suggest then that we've probably got some more downside work to do. 215 is support in the Russell. Breaking 215 in the Russell would put it outside of this area or this rotational pattern. And that would then give me the beginnings of a little bit of heartburn concerning the other two indices as well. But you can see this this is the spiders. You can see this 598 area where we came and tested today is pretty important. And then looking at 590 down to about the 580 area before we really need to have any heartburn over what's happening here. In terms of being overbought and oversold, the NASDAQ is extremely oversold, not so much with the NYSE. So this does not preclude the market from going lower in Monday's trading. But certainly we want to be aware of the fact that it is at an extreme oversold position for the NASDAQ and at a point where we could see some type of pause or rotation back to the upside. Now, strategically for Monday, we closed in the indices. We closed at or near the lows of the day. That's going to suggest the potential for follow through on Monday morning. What to watch for on Monday is a divergence in market breadth. So if we get a lower low and you see market breadth is stronger than what it is in today's trading, then that's going to suggest strengthening within the indices themselves, and then we'll see some type of rotation back up or some type of pause that will work off the oversold condition. It is possible also that this is the low, this low will hold, and we could see just another rotation back up, and today's move could get completely retraced. So any lower low, watch for a divergence in market breadth, watch for lower volume, and then if we do see that rotation back up, how that develops will be very important in analyzing to determine whether this is done, this rotation is done right here in this 598 area, or whether we're going to see additional downside after a pause that works off some of the extreme oversold condition that exists, especially in the NASDAQ. Watch a potential test in the Qs of this 520 area. And if there's diverging breadth and volume, then that would suggest a pause or some type of rotation back up as well. So basically, if we open up down on Monday, which closing at the low of the day suggests that it would have continued lower if the market hadn't closed, then that would, as long as breadth is not diverging and volume is still increasing, then we're going to see a continuation of this thrust to the downside. If there are divergences in the internals, as I've said, then that would then suggest that we're going to see some type of pause. Today was a pretty big move in terms of price development. We'll see some type of pause, potentially work off the oversold condition, and how, if and when that pause or that rotation back up again occurs will be very important to analyze. Have a great weekend, and I will pick this back up on Monday for subscribers.